that's why it's really important to have a plan and understand what your goals are.
In fact, my camel out there is suffering right now with a broken back.
So I actually found Pepe when it was only a couple of hours old, and I'm like, oh, this is a funny meme.
Oh my god.
Yo! Who is this degen?
The old man is swing trading over years at a time. And it's like, that's where the real money is made.
The answer is a permanent loss. With single-sided staking, you don't have to worry about a permanent loss.
Really, at the end of the day, it's just the matter of a macro market. It's just what happens.
If you're aware, if you're disciplined, you can hone that into further financial growth.
Financial freedom, so we can actually live life and not have to be constantly living paycheck to paycheck. I mean, that's the ultimate goal, more or less, right?
Welcome to the DGen Roundtable, your go-to show for the wild world of crypto and economic markets. Join us as we dive into the latest news, unpack the market moves, and share unfiltered takes on where this crazy ride is headed. Buckle up, DGens. Let's talk money, memes, macro markets, and everything in between. Tonight, I have with me Agent J, Zenith. I am certainly excited for the show tonight. Spent a little bit of time watching golf. I got my little green golf shirt on today in remembrance of the Masters. Congrats to good old Rory finally getting his own green jacket. But golf is not what we're talking about today. We may be talking about some things like hitting the ball in the water, maybe getting a couple good strokes under par. But we have a wild ride to talk about. How you doing, Zenith?
I am doing very well, and actually, not in honor of the Masters, but just me doing my normal thing. I played golf yesterday as well. Although I will say, I think the course did something in honor of the Masters, and they made the pin placement very, very tricky. They tucked them away real tightly against edges and around bunkers. It was like, oh man, this is tough. I mean, it was fun, but it was tough. I think I ended up shooting like a 90, 91 somewhere in there. So a little lower than average, but overall, oh man, it was a beautiful day. It was like 80 degrees out after getting snowed out last weekend. So
wow,
I was stoked to get outside. I probably got a little bit of color on my nose, unfortunately, but it is what it is. It's good to see all you guys tonight. For the folks at home that don't know, hi, I'm Zenith. I'm a bit of a government and legal analyst here at the DGen Roundtable, and I am producing tonight. So if you have any comments, questions, or funny quips throughout the show, please put them in the chat. We'll bring them up, and we'll also do shout outs periodically. But other than that, it is great to see all you gentlemen. Jay, how we doing, buddy?
Had to make sure that my mic was unmuted. I am doing excellent, gang. It's been a great weekend, great week. We had a lot of great discussions throughout the week in the DGen Roundtable community Telegram. As you guys know, we stream in there every single day, 7:45 a.m. MST. A lot of tariff talks, a lot of chart reviews and chart analysis. We did a lot of altcoins. I believe that was on Saturday morning, but throughout the week we mainly focused on Bitcoin and Ethereum. And let's just say, man, we call a lot of these moves to a T, and we're just getting better every single day. Whether the markets are up, or whether the markets are down, we're trying to give you guys as much information as we possibly can, as much actionable information as you possibly can. And I think the community members are happy with it. So if you guys want to get in on the action, the Telegram always gets the information and all of the alpha first and foremost. So go ahead and scan that damn QR code, because if you're not in the Telegram, man, I mean, I guess you don't like making money, but you know, that's my personal opinion. So, but other than that, it's been a fantastic week. And the tariff news over the weekend kind of gave me some whiplash, but we'll get over that when we discuss those particular topics later on in the stream. But other than that, man, it's been good.
You know, I'll say that it's been a bit of a bumpy ride up and down over the last couple of weeks, but as someone who watches the market, as you two do as well, you know, not just daily, but constantly, I've been enjoying this ride. It has been entertaining, to say the least. Do we always want green candles? Yeah. If we could get green candles constantly, we'd love that, but that's just not reality. So I'll enjoy the turbulence and enjoy what I will also say is a bit of comedy throughout the worldwide markets over the last couple of weeks. So tariffs, man, we'll get into that, like you said, Jay, but my mind's a little boggled. Up until, I don't know, the last few days, I thought everything was going pretty well to plan. And we'll see if that's still the case. But I think we should get a quick round of chat shout-outs, and then we will hop into a little TA and then get into the bulk of our topics.
Absolutely. Let's get after it. First and foremost, good friend of ours, Shinshirian54X, aka 54 Cent. He's saying, "What's up, DGens? Good to see you, sir. Always a pleasure." After that, we have our very own international man of mystery, Will Stevenson, who is not here with us tonight because he is traveling the globe. I think he's going down to Bitcoin land, going to try to convert them to the good message of Hex and all that's going on there. And then after that, we have Jemmy saying good afternoon and evening, gentlemen. Good to see you as well. Gentlemen, do you have any comment on this one? Jimmy's asking us what happened with the Manta guys. I am unfamiliar with this, but if either of you have a comment on this one, please let us know.
Yeah. Jay, have you been unpacking what's been going on the last few days here?
With Manta, no.
Last few hours, sorry. It's Mantra. That's just a mistype.
Mantra. No, sir. If that's the chart that our members posted just a little while ago, no, I have not been paying attention to that. I tend to keep my focus fairly narrow, within like the top 10 assets by market cap, and then altcoin requests as they come in. So I'm not really familiar with shitcoin number 2,559. So I'm not sure if this is a shitcoin. I'm not trying to dunk on your parade if you own this project, but I hope it's going good, or maybe it's not. If it's not going good, I hope you got out in time.
Yeah. So just a quick update. So essentially, what we had was a $6 billion market cap coin having a little bit of trouble today, and they lost 5.5 billion of that in an hour. The team at Mantra says everything's fine. Everything's fine. Just a little blip in the road. Little bit of forced liquidations that were unanticipated. Not buying it. So one thing I know about Mantra, allegedly the people running it own 90% of the coins. So it's not a good thing right off the rip. So for a chart to look like that, something has to have happened from the main wallets, in my opinion. Without having dug deep, I did read a few articles and a few tweets, a few people saying that there was a large movement from one of their main wallets to OKX today, and that spooked people. I don't know if that wallet or that transfer that went to OKX ended up getting sold or what happened, but man, this is wild. Reminds me of Luna a little bit.
Yeah. Yeah, well, this thing is not exactly small in terms of market cap. I'm taking a look at the chart right now on CoinGecko. Currently sitting at a fully diluted, well, what's the market cap right now? It's about $1 billion worth of market cap, and you said that within the last 24 hours, about 6 billion.
Yeah,
of the
it had gone down to
500.
Yeah, it went down from about 6 billion down to 500,000.
Okay,
it's jumped back up a little bit, but
yeah, probably people trying to catch a falling knife. So, yeah, man, when stuff like this happens, it's never good. And I don't know much about this particular asset, but the fact that a singular entity owns the majority of supply, shout out to Hex folks. But usually a singular entity controlling the majority of the supply is never good, because stuff like that happens. Obviously, we can speculate on what is exactly going on, if there was, because like, I don't know, man, like forced liquidation, like why was it forcibly liquidated? Right? Like, I don't know. Like, I don't even know what the value prop of this damn thing is. It's a real world.
They do RWA, so real world assets.
Real world assets. Well, the name is not unfamiliar. I've certainly heard this in the dozens of podcasts that I listen to on a regular basis when it comes to crypto. But man, look, I hope if you own this asset that you got out in time. I hope that they recover. I hope that whatever this is something that they can recover from, and it's not a malicious entity doing all of the dumping. So prayers sent to the Manta folks and the Manta holders, because I certainly don't want to get caught at the very tail end of this particular crash. So
I'll say my one last piece on this, again, without being a super expert. A few weeks ago, I heard, and even before that, that they were supposed to have an airdrop to a lot of their holders, and it kept getting delayed and delayed and delayed. And I don't think the airdrop ever went out. That's not a good sign. There were already some things that were happening within the protocol that probably should have been red flags for anybody that was closely monitoring this project and this protocol. But anytime that you have a multi-billion-dollar protocol that loses 90% in an hour, that's not good. There's something seriously wrong there.
Mm-hmm.
True. All right, gentlemen, we got 2 more chats sneaking in here. We got everyone's favorite crypto influencer on Twitter, verifiably the farthest reaching and one of the largest impressions out there in the crypto space, Tam Tam. She says, "What's up, fam? Good to see you as always."
And I want to give a little shout out to Tam Tam because, there's been you could say a little bit of angst and anger within the Hex and Pulse chain community, and some fighting. And Tam Tam has been calling out some people that may have deserved a little slap on the wrist for some of the things that they did. So always trying to be positive and keep people moving in the right direction. I appreciate that.
Absolutely. Number 1 cheerleader in the space by far. Always happy to have her on our team and spreading positivity as she does. And coming in last but not least, we got your boy Hexakin Lost in Asia. He says, "You get a tariff. You get a tariff. Anyone else want a tariff? China money printer go burr."
Might talk about that a little bit today. Today.
That might be in the works. So yeah, stay tuned for that one. Alrighty, gentlemen, that does it for chat shoutouts. Mr. AJJ, are we ready to pull up the charts and check out our daily close there?
Sorry, what was that, Zenith? One more time. What was the question?
Pull up the charts.
There we go. Let me know when you guys can see that.
There
we go. Okie dokes. We'll go over Ethereum as well if time permits, but for the most part, I do want to focus just on Bitcoin. Usually we just focus on Bitcoin because that's where most of the action is, and Bitcoin tends to lead the market the majority of the time, like 90% of the time. So let me actually go ahead and clean this up a little bit before we head into the Lucas cycles. So let me go ahead and turn off the points of controls there. Okay, so a few developments over the past week that have added a different scenario, a new scenario to our 60-day cycle counts, right? So just a big refresher, just a quick refresher for everybody. There were a few cycle counts that we were considering. One that was a bullish count in which the last 60-day cycle ended on a left-translated 46-day cycle, and that we were considering, this was a theory proposed by Z, that we had a day 2 cycle high here, and that we were actually looking for a new cycle low. We got one here on day 38. And so technically, even on this particular scenario, we are still looking for a cycle low currently on day number 45. All right, this was actually, believe it or not, the more bullish of the counts, because that means we were closer to the tail end of the 60-day cycle, potentially looking for that cycle low. And then, well, at least the next cycle is open for interpretation, right? It's not left or right translated. We take it, we'll cross that bridge when we get there, but at least we're in a new 60-day cycle, right? We were expecting a cycle low a little bit earlier, sooner rather than later. All right, so that was the bullish count. The bearish count that we were considering, this was the higher probability count, was that, let me take out that little doodle, was that we had a day 7 high. That didn't change, but we have a day 57 low on our last 60-day cycle, left translated. We have a day 13 high, and that we are only currently on day number 34 of the 60-day cycle, which means we are still looking for a cycle low, the earliest being sometime between day 40, which is April 20th on a Sunday, to April 25th, Friday. That's the earliest that we usually expect cycle lows to come in, especially if it's going to be a left translated one. They tend to be shorter in duration. Now, if we were to extrapolate to a full 60-day cycle, we were expecting the low to come in, worst comes to worse, about the second week of May. This is the middle of the second week of May, Saturday, May 10th. This was your bearish scenario. We were expecting more downside. However, because of the extremely bullish structure to the upside that this local move gave us, we now have to add a new potential scenario for the 60-day cycles. Let me go ahead and save this real quick. And that is this scenario. This is your turbo bullish scenario, although still a very low probability. Believe it or not, even much lower probability than the day 2 cycle high. The reason for that is as follows. That would mean that in this particular scenario, we have an 84-day cycle left translated with a high on day 7. Now, we'll get Z to comment on this, but having a day 7 cycle high is already at the very tail end of the distribution curve, several standard deviations away from the median. Now you compound that by an 84-day extended cycle, which is also at the very tail end of the distribution curve, right? Very highly improbable. You combine these two, you have a day 7 high, 84-day left translated cycle, and the probabilities for this particular scenario is very, very, very low. However, time is never an invalidation. And the fact that we had this extremely bullish move, which we will go over the structure of that locally, because of that extremely bullish move, it would be foolish of me as an Elliott Wave analyst not to consider the 84-day cycle count. So before you move forward to the local structures, Z, do you have any comments on that new alternative cycle count?
I'm still rather skeptical about it, but at the same time, the data points that we've gotten over the last week have actually made that scenario more plausible, largely due to when we had the good run up off that cycle low on, was that day 38, I want to say? Mm-hmm. Something like that is a possible indicator of a new cycle, especially coming off a potential cycle low like that. I do still think that the overall probability of having a cycle with a day 2 cycle high, although if you want to kind of be skeptical about the immediate up and down candles that we had on it, it still leads to like a day 5 cycle high, which is closer to the realm of higher probability, but at the same time, that still accounts for like less than 2% of all cycle highs. Yeah. There will be less than, like, to put it in perspective, the way I do this analysis is based off normal distribution, aka the bell curve. I look at the set of data that we have from all the previous 60-day cycles, look at where we've typically seen the cycle length, where we've seen cycle highs, and then I can use that to plot on the bell curve where it is. That is a very, very tiny end of that bell curve there, where you were talking about like all the cycle highs of under like day 6 accounts for 2% of all possible cycle highs. So again, it's a very, very improbable scenario. Yep. And there is the other improbable scenario, which is the possibility of a failed cycle. But those are also very, very improbable, and we don't see them that often. Like, again, it accounts for less than like 2% of all cycles.
Yeah, I could probably count since I started analyzing the 60-day cycles on one hand how many times we've had a failed cycle. So low probability that we have a failed cycle, low probability, super low probability that we have a day 7 left translated 84-day extended cycle, super low probability. And then the other alternative scenario is a day 2 cycle high, even also extremely low probabilities, right? Me and Benny were having a discussion about this in the chat, right? And it kind of sucks that all of your alternative scenarios are all such low probabilities, but we do have to consider it because the structure is there. The only thing that would convince me that that scenario, the 84-day count scenario, is possible is if we take the most probable scenario, which is a day 13 cycle high. If we take out your day 13 cycle high, right? This is our main count that we're considering. If you take out the day 13 cycle high, then guess what? Your 84-day cycle just became the main scenario. It just became the main scenario, right? Because a left translated extended 84-day cycle with a day 7 high is still more probable to me than a day 2 cycle high. Right? Like, come on.
Well, the great irony here, though, is that we've now shifted to the other side of the bell curve. So we were talking about the possibility of super short cycles on the left translated side. But if you go for an extended cycle all the way out to day 84, you are again talking beyond 2 standard deviations. And you get to the point where you're accounting for like 1.5, like 1.5% of all cycles get out to that length. And it makes it also even more concerning because the general structure doesn't really fit it. Because if we were going to see a very, very right extended cycle, what you would typically see is a cycle high past day 30, past day 30 usually as well. Yeah. So it's again, it's all these data points where it's like you can build these scenarios and these theories based off it, but at the same time, you're kind of operating outside of the norm, very outside the norm actually on this one. So I think it's something to consider for sure, but at the same time, I think these are things to be taken with a rather large grain of salt, shall we say.
Yeah, absolutely freaking lootly. Now, again, right, me and Zenith are probably going to land on the same like probabilities here. This is your highest probability count at the moment. Left translated 57-day cycle for the prior one. Current day 13 cycle high. And we are on day 34, still looking for a low because we obviously swept this low over here. So we're still looking for another low. Now, I don't know what Zenith's thoughts are on this, but in my personal opinion, if we take the day 13 high, then I'm going to shift my probabilities, right? At the very minimum, we have cases of an 80 day plus extended cycle. This would be the first day 2 cycle high ever, right? So that's my personal opinion on this, but we'll cross that bridge when we get there, right? The challenge for the Bulls right now is if you want to convince me, if you want me to get really bullish, take out the day 13 high, then we'll talk. Right? This is your boogeyman right here. Right? Unless you can take out this current high, then this is still your main scenario, and we are still looking for a lower low. Right, taking out this current low right here of $74,420.69. I'm telling you, man, we're being trolled.
Yeah, I think I do largely agree with you as well. The thing that I'm pointing to for the possibility of a new cycle low, lower than what was that, 74,400 ish, is I think we still have a lot of bullets in the chamber when it comes to macro events, potentially on the downside. I think that obviously the thing that has been dominating the news cycle for the last 2 weeks at this point has been the tariffs and the new trade war. Effectively, there's a lot of developing news all the time on it, and we still have a lot of unresolved issues surrounding that. And I think that those are going to be the things that can possibly create that new cycle low. And specifically, I'm looking out right around like May 7th, because I believe that is our next Fed meeting.
Yep.
And if the market shifts to an area where they're expecting rate cuts, and then Jerome Powell comes out and doesn't give them rate cuts, that would be a scenario that could possibly cause enough bearish sentiment in the market to temporarily spike it down a little bit past that 74K level. And once we do that, we're starting to look at that 70,000 resistance area, and 71.5 is what I had as well. So that's what I'm looking at for a cycle low. It is, if we got really bearish, it is possible that we could go all the way into the 60s, maybe even down to that 63 level. I got
scenarios there at 63, man. That's a range point of control for the last consolidation area, 63.5. Yep, that's where that's one of my worst case scenarios also.
Yep, and I think it was either 2 weeks or 3 weeks ago we talked about the possibility of Bitcoin getting down to that 63,000 range as well. This is not something that's like super out there and a crazy idea. It's a lot of people are looking at the markets, trying to read the data, look at the charts, and that 63 level is a level that a lot of people have identified as a real possibility. And if we're looking at it, getting down to that 63 level, that would be a correction of a little more than 40%, which would be rather intense for being at this point in the 4-year cycle, especially in the part that should be some of the most bullish times that we have over the next like 6 months effectively. Mm-hmm. But that kind of action it's inside of the realm of possibility, considering that crypto does have the ability to move rather volatilely. So
Yep. Yeah, man. Absolutely. Couldn't agree with you more. So I am also looking at the minimum, probably around that low $70,000 area, but we'll actually go over some of those more some of the more accurate and precise areas that I'm looking for in terms of major support and resistance when it comes to the price action. So we went over the Lucas cycles. Now we're going to go over some Elliott wave analysis just locally, right? Because that's what we care about. We care about local price action, because what's happening in the local price action is going to tell you what the next move is going to be. All right. So now the reason why I'm heavily considering the 84-day cycle count is, like I mentioned earlier, we have extremely bullish structure here. Right? The bears finally gave us a very convincing bullish structure to the upside, and that is a leading contracting diagonal. All right, you're taking a look at the small count in red. That was your diagonal, and a 1, 2, 3, 4, 5 already completing your first major impulse to the upside in your wave 1 green count. That's your larger degree count. And for the bulls, what you're looking for now is a corrective structure to the downside, 3-wave-ish in nature, or in this case, that's a zigzag, or you're looking for a range-bound sideways movement, right? And either a flat, a triangle, WXY, etc. This is what you want to see during this move down. And we are going to get a move down because you do have a finished structure, right? So we have a directional bias over the week. What I was the take-home message that I was trying to hammer home for people is that when it comes to 6-day cycles, if you know when a cycle is supposed to end, right? If you have an estimate of, okay, we know it's left translated, it's going to end anywhere between day 40 to day 60, that's when I can start dollar cost averaging a little bit heavier, because if it's left translated, we know that we're on the balance of probabilities, we're going to get another low. For Elliott wave analysis, Elliott wave gives you a directional bias. It doesn't matter if you're looking at it from a monthly, a weekly, a daily, hourly, 30-minute, 5-minute, it doesn't matter. Sideways, trending markets, doesn't matter. Elliott wave on a local structure gives you a directional bias. And for the entire week, because of the bullish structure, we had a directional bias to the upside. So it didn't really matter when you came in, you made money. And now, because we have a finished impulsive structure to the upside, our directional bias has shifted on the local structures from an upside to corrective. And what happens, the nature of the correction is going to tell us whether, was it a correction, right? Was it a counter trend rally? Or are we starting the reversal of momentum and we're resuming the the bull market? All right, so directional bias is what we focus on for Elliott wave. So in this case, it's a bullish bias, right? Because you have a finished leading contracting diagonal. You're looking for a 3-wave corrective move to the downside, and your targets for the moves are as follows. Let me go ahead and turn on. Let's go ahead and take a look at the fibs first before I turn on my major support and resistance. If you take a Fibonacci retracement tool from the very start to the end of the move, right? From the start to the end of 1 in green, your major areas of consideration for a wave 2 are as follows. The 382 is an uncommon target, right? It is a very rare target. The more common areas of retracement for price for a wave 2 is between the 0.5 and the 0.786 Fibonacci. So that gives you a range of 80,044 and 76,777. If you take the 886 at 75,667, then you look for lower prices, meaning you take the current cycle low sitting at 74,420.69. Telling you guys, we're being trolled. It would actually be super cool if that was the low for like before the rest of the bull market continues. And everybody remember that time back in Q1 of the post-halving year when our low was 74,420 and 69 cents? That would be a number that will be etched in everybody's memory for like forever. So it would be so hilarious if that was the case. All right, but so now let's turn on our points of controls and see if we can find any areas of confluence with our major Fibonacci. So let's go ahead and take a look at the points of controls. And we do have a ton of confluence. You can see that we have 2 major areas of horizontal support when it comes to the daily. We have a daily naked point of control at 79,619. another daily naked point of control at 77,417. And then we have a weekly naked point of control at 76,880. So a lot of strong horizontal support to the downside that have yet to be tested. In particular, what I am very interested in is the 618 Fibonacci. Not only is that the golden fib, a very, very common fib for wave twos to retrace down to, but you can see that you have significant overlap with your weekly naked point of control. And if you've been in the chat observing the charts with us for the past week, for the past few months, you know that these points of controls are very, very much respected. All right. And so that gives you a fairly decent target box for support to come down to, for price to come down to, if this is corrective. Expect price to find support to the downside anywhere between 79.6 and 77.5, with a major area of interest at 78.6K because of the confluence of fibs and the major point of control. Right? That's the bullish scenario. You have your price targets. Let's go over some time targets as well. So you have your price. I always like to give you both price and time targets. So in terms of time, if we take a fib time tool from the start to the end of wave one, oops, let me redo that. Start to the end of one. Ideally, the minimum time target for a wave two is the 382 fib time, which places you tomorrow at 11 p.m. Wouldn't that be nice? And then we resume the trend. But if we extend beyond the 382, the next most common target in terms of time is the 1 fib time, which puts you Friday, April 18th at 12 p.m. All right, so those are your price targets and your time targets for the bulls. Now, here is where I can you can visualize the directional bias when it comes to Elliott wave. You know what the bearish scenario for the market is? The main bearish scenario for the market is a WXY double zigzag, which is basically the exact same direction as the leading contracting diagonal. And so over the entire week, which is why I told the folks watching, I was like, look, whether you're looking for another low or you're looking for the beginning of an impulse, it doesn't matter, because the directional bias at the beginning of last week was up, which means it was an opportunity for you to make an entry, whether it was a spot entry or a long, and ride the move up. And that's exactly what happened. Your main bullish scenario and your main bearish scenario both had a directional bias to the upside with the exact same targets, mind you. Exact same targets. Right? This was our target box up here. You had major fib sitting up here. Also, the next major area of horizontal resistance, which is a naked daily point of control at 86.341K. Hit it right on the nose. Right on the nose. The only difference when it comes to the bearish structure is as follows. You're looking for a more aggressive move down, right? Your X is already in, and you're looking for the last leg of the correction, right? W, X, Y in green of a larger degree. Now, on the good news is, here's the good news. Here is the good news for the bulls. Even if you are looking at the corrective structure, if you take a fib retracement from the start to the end of W, come on. There we go. You can see, let me toggle on the targets for our double zigzag. You can see that on our move to the upside, we actually took the 0.7 Fibonacci. That's significant Because if you take the 0.7 fib, you decrease the probability significantly of another aggressive zigzag move to the downside. Right? It's not an invalidation, but it does affect the probability significantly, which means higher likelihood that on your next move down here for your Y in green, which is the larger degree, it is going to be a higher probability that the next move down could be one of the two following scenarios. It could be a flat, right? A 3, 3, 5 ABC correction in your Y. It could be a triangle, or it could be another complex WXY sideways movement. Which means any price movements to the downside is going to be significantly muted, much more muted. Which means my primary target, if we were to take the cycle low, right, my first major area of horizontal support for price is right here at 73,949. If you notice, it's not that much lower than our current cycle low, which is good news. Very good news. And the reason why we're keeping an eye on that particular level is because that's the 2024 range high. It is the first major area of weekly support, right, to the downside. And that is the very top of that big range that we spent consolidating in during the entirety of 2024. All right. So that is your first major area of horizontal support for price if we make another lunge to the downside and take out our cycle low. So that's really the biggest difference right now between the bulls and the bears. For the bulls, you're looking for a 3-wave corrective structure, find support at the several major areas of horizontal support, right? And then you get continuation of the trend to the upside. For the bears, you're looking at something much more aggressive, right? When you start seeing impulsive moves to the downside, then you have to reconsider, shit, we might be a bit more bearish, especially if some of these things that we're about to talk about on like the narrative basis actually does come true. It actually does have some meat behind them, right? So we'll leave that conversation for when we actually get to those topics. But just as a quick refresher, if we zoom out here on the weekly chart, here is what me and Zenith were talking about earlier, and why we have why this particular price is a magnet for us. Here is your 2024 range. If you take a volume profile of that entire range, oops. Go. If you take a volume profile of that entire range, that orange line here is the range point of control, which is the price point that the majority of trading volume occurred in. And that is sitting at $63,500. That is why you're seeing that number almost everywhere in crypto Twitter, right? We're not wizards here. We don't have a crystal ball. This is all math, right? You could calculate this if you wanted to, if you didn't want to use the easy tools that TradingView gives you. But that's the volume profile for that range, right? When we spent moving sideways there, whenever price got into 63.5K, people said, that's where I'm going to buy or that's where I'm going to sell. Simple as that. That's why that has the most amount of trading volume. And that's why that price is a particular strong magnet for a lot of analysts. All right. But we cross that bridge when we get there. Our first main area of horizontal support, like I said, 73.9K, first major area of weekly support. If we lose that, then we can take it from there. Oh, actually, since I'm already here in the weekly, we actually do have another small area of weekly support right at, what is that? That is 67.6K right here. That's a very small range. That's a very small range right over here. that I've just circled. Very small range, but that's the point of control for that range. 67.7K. All right, but we cross that bridge when we get there. We observe what happens locally on the price action, and then we take it from there. And that's what I got for Bitcoin.
Price agnostic, right? That's essentially what the
Price
bottom line
agnostic.
is, right?
Price agnostic, man.
We have to plan for both scenarios.
Mhm.
And as more data comes in, it gives potentially more a more push to either the upside or the downside. And then we readjust if necessary. But we're only reading what the market's doing. And Jay, Zenith, great analysis there. But we're only reading what the market's giving us, right? This is data. And every additional data point that comes in might change how we read the data, right? But all we can do is deal with the data that is currently there on the charts and then make our best guess, as you're saying. So good points. We all want to see it go up, but yeah, always have to plan for the downside. And it's how people get wrecked, right? Just being either turbo bearish or turbo bullish, when in reality, there's, at least in the short term, two ways that things can go.
Yeah,
now
Definitely.
long term, this cycle still bullish, but there's a lot of macro events out there that you have to be aware of and you have to be ready for that could affect the market in ways that we don't anticipate right now or that we hope don't happen. But that doesn't mean it's not a possibility. And we at least have to be ready for all those possibilities if you're going to give yourself the best chance of escaping this cycle up and not down, or not round tripping, like many of us have done in the past.
Yeah, never pleasant, but that's true. We live in the world of probabilities. We have no certain way of knowing which way it's going. So you just got to make sure that, like Jay always does with his analysis, make the bullish, make the bearish case. And then there is always a third possibility, which is just go sideways for a while. So just be prepared and understand what your balance of probabilities looks like at the current moment. I guess just to stick my 2 cents in here real quick, I do largely agree with Jay's analysis. And I think one big data point for me that I know he doesn't give a whole ton of credit to, but for me is the moving averages. And I think something like that actually confirms the scenario that Jay was talking about, which is the possibility of downside in the near future. So if you look, we came back up and we passed through our 20-day moving average. That's the yellow line. And we even came up and retested our 50-day moving average. We haven't quite broken through it, but we're going to need a few more candles to confirm whether or not this is actually going through it, or if this is a retest and we have more downside potential here coming up soon. As far as getting back above the 200-day moving average, this big long red line here, it's going to take a decent amount of time back in that 98K range to allow for the 20 and 50-day moving averages to get enough data to move back above it. Because right now, what we talked about last week is we had the cross, we had the 50-day drop below the 200, and we also had the 20-day stayed well below the 50 for a good minute, and that one crossed the 200 first. So that's what I'm looking at for there. When it comes to the weekly, it's somewhat similar, which is that we came down and we actually broke below the 50-week moving average. Shout out to Mr. Angry Twinkie. He was the guy that was getting me to pay a little more attention to this one. But traditionally, you do not cross this 50-day moving average pretty much at any point throughout bull markets. If we look at in the past, we had pretty much 2 or 3 weekly candles that were just wicking below it, but not actually any finishes. And that's, aside from a little bit here early on in 2020, and then obviously the COVID dip of 2020 as well. But that 50-week moving average, I think it's something to keep an eye on as we move into the near future. Yeah. And again, if we do get that move down to like 63 or something down here, hopefully that is only a quick wick below the 50-week moving average, because anything outside of that is starting to really throw off some red flags and raise some eyebrows. And it's something to really think about, and it's a point of concern potentially about the 4-year cycle. But as I'm sure you're tired of us talking about here, we're going to assume that the trend is going to hold until we have confirmation that the trend is broken. So as it stands, 4-year cycle, not canceled yet, still very much in play.
Z, if you notice too that if we do break down and have weekly closes below the 50-week, you realize that only happens when the trend hasn't been established yet at the very beginning of bull markets. At the very beginning of bull markets, there's a reason why in LU wave analysis, wave 2s are always the most aggressive, because it's the start of a trend reversal. And people are not convinced yet. They think that it's just another counter trend rally. And so they sell more aggressive into the pumps. And so it increases the probabilities and the likelihood that you close below those long-term moving averages, like the 50-week, like the 200-day. However, like Zenith pointed out, if at any point during the very tail ends of bull markets, we might wick below the 50-week, but you don't want to spend weeks closing below it the same way that you don't want to spend weeks closing below the 200-day moving average. Where's the 20-week sitting right now currently, Z?
20-week is currently sitting at 92,400.
Yeah. You know what they say? If you stay below the 20-week, altcoins they tend to be bleeding. And if I think it's no news to anybody that most altcoins are bleeding heavily.
Yes, especially the Ethereum-based altcoins too.
Yeah. So, right, you have to take what the market gives you. You can't
Definitely.
you can't just be a forever moon boy, because that's how you round trip things. Yeah.
One thing that's interesting that I'll also say, I know you guys don't look at it a lot, and I don't look at it all the time, but a Wyckoff structure. I have seen some people talking about Bitcoin forming, sort of that spring pattern of a Wyckoff structure. So we'll see what happens. But I really think the macro market right now is going to have a big play, at least in the short term on this, and it might suppress prices for longer than we had originally anticipated. And look, you have to take that into consideration. Months ago, we didn't. Let me back up. When Trump first took office, or even before, what did we say, Jay? Zenith? We said there's going to be some short-term pain in the markets, and there's going to be some uncertainty if Trump gets office. Now, long-term, we think it's better for crypto, better for the markets. But we did say, even before it happened, that there is going to be some uncertainty because of what he wants to do at resetting some of the trade markets. And we're seeing that now. We're seeing that play out. And unfortunately, or fortunately, depending on how you look at it, if you're looking short-term or long-term, we're going to have a little bit more of that unpredictable macro market. And that's going to just affect things. And I think it's going to suppress price a bit.
We spoke about this a bit over last week. Currently, whether you like it or not, it's a headline-driven market. Don't ever let anybody ever tell you ever again that news doesn't move markets. Because we got fake news about tariff pauses, 90-day pauses on Monday. And you could see as soon as that announcement was made on that 1-minute chart, man, just exactly how much that pumped. And then same thing again on we're going to actually pause it for 90 days. Right? Don't let anybody ever tell you again that markets don't move on news, because they absolutely do. You cannot separate the psychology from the market structure. Okay, because the market is run by people, and people make decisions based off of emotion, based off of the headlines. I know we wish that it's not a headline-driven news market, that people would actually invest in assets that have very good fundamentals. Ethereum would be doing much better, right?
Yeah, it would.
But unfortunately, that's like we are in the generation of degenerate gamblers. It's just how it is. So, it's funny actually that Bean mentions Wyckoff. We spoke about Wyckoff last week as well. I like Wyckoff. I don't go over it as much as I do, because Wyckoff is like it's a singular picture. It's very easy. Mm-hmm. It's very easy to tell where the accumulation distribution phases are. What I went over with the chat in particular last week, and what was really hilarious, is because when you take a look at the on-chain data, it's really sad. It's really sad to see when distribution and accumulation occurs, when it relates to the long-term holders and the short-term holders. The long-term holders, guess where their distribution phase occurs? They occur close to the tops. Guess where the distribution phase occurs for the short-term holders and for the majority of retail who don't know better? Just a shot in the dark.
Also the tops.
At the lows. They distribute, right? The distribution phases, they're distributing their Bitcoin. They distribute their Bitcoin to the long-term holders at the lows. The accumulation phase is flipped. The accumulation phase for short-term holders and for people who don't know any better are at the tops. And then the accumulation phase for the whales, they're at bottoms. It's a really sad contrast when you take a look at that kind of the contrast between distribution accumulation for whales And for everybody else, man, it's always happening at the opposite ends. Whales sell the tops, retail buys the tops, whales buy the bottoms, retail sell the bottoms. It's a sad picture. And the on-chain data reflects it. It's a sad picture, man.
Yeah, you know what? One other metric that I've been looking at recently when it comes to Bitcoin, and I've been meaning to move us off this topic into tariffs, but have you guys been looking at the Bitcoin miner difficulty? It's now officially at new highs, right?
Yeah,
and when we see highs of Bitcoin mining, it generally is a good sign after that, right? So when we reach new highs of hashtag difficulty, we generally see a strong uptrend in Bitcoin. So how long that'll take, we shall see.
Bean, real quick.
Yeah.
Hey, Mrs. Producer, could you kick this meme masher out off the chat? Get this fucker out of here, man. Just dropping these fucking CAs, man. Hey, don't copy paste that CA, gang. All right, kick this fucker out in the chat, man. Put him in timeout. Go ahead, Bean. Sorry about that.
No worries. I think it looked like Zenith was going to also pull up a chart there. But there's two things. So we see we're starting to see a larger percentage of Bitcoin supply held at a loss, and we're seeing Bitcoin miner difficulty reaching new highs. So generally, when we start to see these things, we start to see in the past large increases in Bitcoin's prices. So again, that's just another something to keep an eye on. Each data point just gives us a different picture and everything that we need to keep into consideration. Zenith, was there something that you were going to share on that?
Nope. I just pulled up the Bitcoin difficulty chart for a bit of a visual. It's kind of hard to see with the Giants time scale, especially not on logarithmic.
But recently it jumped. Recently it jumped a good chunk. Yeah. And that's what I had been looking at. Yeah, there you go. Yep. So generally means bullish, right? Because what happens when Bitcoin is more difficult? They need stronger computers, and it costs them more money to mine Bitcoin. Therefore, for it to be profitable for miners to mine Bitcoin, price has to go up. That's just the market, right? If you want to mine Bitcoin and the price doesn't go up and it becomes more difficult, no one's going to want to mine Bitcoin, right? Yeah. So there's a fair opportunity that there is still medium to long term of this cycle. Very positive news for Bitcoin, but not everything is hunky dory, as we're going to talk about here in the macro market. So anything else you guys want to touch on that, or should we hop on over to our next topic?
Get it on.
Mm-hmm.
All right. Should we? It's right 9 o'clock. I think we should hop into the big one. You want to touch on tariffs, Zenith? Want to start there?
Yeah, we can. I do want to run through some chat outs real quick because we've got a bunch piling up. You guys are fantastic. Thank you so much for all the love tonight. All right. First up, we got our buddy Brown, aka Farmer J. He's saying, extended 84-day super duper cycle, you say. There you go. We also have Mixed Mix, aka Yasole, coming in here. Agreed. We are all trolled. And he's saying, Bitcoin 55K. I don't know about that one, but
that would be scary.
That would be a little scary. That's breaking through that 60,000 level. It would be a bit much, in my opinion, but we'll have to see what we get. After that, we got Kay Hudson. He says, if only we had a better Bitcoin. Someone talking about little Hex.
Only people in the community.
Delayed gratification.
Only people in the community bought Hex, instead of every other 1,000 coins out there.
Mm-hmm.
Yeah. We'll do something for sure. And then shout out to our folks over on X watching. You guys are all studs, by the way. The numbers over there are fantastic.
Yeah, we're starting to get more and more people watching on X and less on YouTube. It's been a continuous trend.
Agreed. We got King Toshi Nakamoto over there saying, "Sup, community? Good to see you, sir. Thanks for stopping in." We've got another X user, Base King, saying, "Yo, Atkins the best." That's right. We'll be talking about our boy Paul Atkins coming up towards the end of the show. He did get confirmed by the Senate. We now have an actual SEC chair. Back to a longtime friend of ours. We got Moonpilled Rational Optics. He says, all in on red.
All in on orange, sir. All in on orange, baby.
He's saying the portfolio is looking a little red right now, but I don't think you're alone there, my friend. It'll be all right. We also have Chad Donnerschwanz. He says, hello, fellow base crypto bros. Good to see you, my man. Pleasure as always. Kay Hudson coming in here as well. He says, are whales contrarian then, Agent J?
Yes, yes, sir. You could see it reflected on the on-chain data, man. And the reason why I showcase a lot of the on-chain data is because you can't fake that. And the on-chain data does a very good job of parsing out like what the whales do, what the smaller holders do, what the long-term holders do, what the short-term holders do. It presents a very, very, very clear picture. Right? Again, it's just math, which is why I like it, because it's just math, it's just numbers. And it's really sad because, like I mentioned, when whales distribute, it's at tops, and they distribute their tokens because people have to buy it, right? Somebody's buying it. They're distributing those tokens to the short-term holders, to the middle of the bell curve retail investors. And then when it comes to buy the bottoms, they're the ones accumulating there. And then the people distributing their cheap Bitcoin and altcoins are the short-term holders and the middle of the bell curve people. It's a really sad picture, which is why we harp on people. You don't trade yourself out of position. You have your long-term bags that you buy at the very bottom of bear markets, at the very bottom of harsh dips, right? Harsh corrections. And then you have a trading bag that you practice trading with. Do not trade yourself out of position because you don't want to be part of that statistic, man. It's a really, really sad statistic. The discrepancy, you know how crazy it is, guys? Right? The numbers, the gap between whales that hold more than 10,000 Bitcoin is increasing so far. And that's that distance is great, even from the people who hold anywhere between 1,000 to 9,999 Bitcoin. Right, that gap between first and second place is getting wider and wider and wider. It's really sad. So do not give away your Bitcoin. Do not give away your Bitcoin, man. It's not the move.
Yeah, market
Amen,
psychology is
brother.
the correct word. Yeah.
Amen.
I think, go for it.
I was going to say, look, you can't overstate it. You can't overstate it. Don't get over aggressive. Crypto is already leverage on the market. If you continue to get even more aggressive in a place where already leveraging your money, you're going to get wrecked. So play it safer than you might want to, especially when you start to feel that euphoria, that excitement. People tend to move into more of a risky play, and then they might get wrecked. And as Jay's saying, it happens far more than it should.
Yeah,
true. There's ways to be a contrarian wisely, and then there's how to be a moron that is a contrarian. And I think the key here is it's the classic adage of like, oh, buy low, sell high. But the reality is that's kind of hard to do, and you do the opposite a lot if you try to go real too far on one side of the IQ bell curve when it comes to being a contrarian there. So it, again, like Jay's talking about, the gap between the people that have those large bags and the people that do not is only going to get larger. And we're getting to the point where we're having financial institutions and nation states at this point actually starting to get in on that race. And at current prices and future prices, that size of entity are realistically going to be the only kinds of people that can really cross that barrier and get up over that 10,000 Bitcoin threshold. So hate to see it, but that's just the way that this is going to go further into the future.
So what's your next opportunity?
Alrighty, we got two more comments to get through. We got Centurion54X saying, what kind of TA does BlackRock do? How much do you guys think they trust the 4-year cycle versus using Wall Street TA strategies?
Whatever the hell BlackRock's been doing, BlackRock, I'm not going to comment on their technical analysts. If they do have them, they probably see a lot of the same exact things that me and Zenith see. They just have a lot more money, so they can buy a lot more of these dips.
I think they also have a fundamentally different strategy too, which changes how you look at the charts. Depending on who you are and what you're trying to do, you're going to come away from different scenarios, which is like when Jay and I are talking about the charts today, we're looking at a shorter time frame around that 30 to 60 day area to try to figure out these cycles so that if you are someone who likes to do smaller size swing trades, 60-day cycles is a great tool to utilize for that kind of thing. If you are BlackRock, the size of position and the risk profile that you're willing to take on, both of those things are very, very, very different than the average retail trader. So you're going to have a fundamentally different strategy. So we can all, like Jay and I and BlackRock, we can all look at the same charts and come away with different points. We all agree on what is going on the various time frames, but we disagree on which time frames we care about.
Also notice the discrepancy between BlackRock and most of the people who engaged in risk assets, right? Because this is a degenerates playground in crypto. BlackRock has a small allocation, right? 2% of their portfolio, even though we're talking billions, right? 2%, 1 to 2% of their portfolio into crypto, Bitcoin, Ethereum, making the majority of their portfolio. And then a smaller percentage in other risk assets. But even then, we're talking about like assets within the top 10, top 50 by market cap, right? And their time horizon is long. Contrast that with the degens. Their portfolio allocation is 99.9999% shitcoins, and their time horizon is the next 2 minutes.
Accurate. Very accurate, actually.
Yeah. So is it a surprise that you see the on-chain data reflect that? Not really.
Yeah, and BlackRock,
All right. Go for it.
they're what, almost 12 trillion assets under management now and increasing. So they're doing something right.
Yep.
Only getting bigger.
Yep.
All righty. We're going to close off chat shoutouts with one final one from our good buddy Large, who's trying to remind people, like the smash, degens, or as Will Stevenson is famous for saying, like the smash button, please. And we also have King Toshi Nakamoto. He said, I invited my community to watch the podcast. Hey, much appreciated, brother. If you ever want to chat with us, hop in the Telegram. You can ask us any questions you want in there, or feel free to shoot us any DMs, tag us on Twitter, all that jazz. You know the deal. Okay, with that being said, let's get into what appears to have been dominating the news cycle over the last 2 weeks. Tariffs. And it sounds like we got some updates. So, gentlemen, I have a handful of articles that we're going to run through to talk about the various states of the tariffs. So, coming to us first from the AP, we have Trump pauses steeper tariffs for most countries while hiking levies on China. What we know so far. I believe this one was coming to us from April 19th, which is Wednesday.
Outdated.
Yes, Wednesday. It's crazy to think that it's outdated already. But
every hour it seems to be outdated, but we don't even get the proper information, which is challenging. But this is going to give a good overall view, right?
True. It'll give us step one at least. So step 0, or the original step 1, was the Rose Garden announcement when Trump came out with the giant, beautiful board of all the various tariffs that are going to be imposed on the different countries. Then, I believe it was that Monday, we actually had the fake news about a 90-day pause, which caused the markets to absolutely gigapump. And then we found it was fake news, and they gigadumped in response. But what we got here was the actual 90-day pause. So, from Wednesday, we had a 90-day pause coming out for nations most targeted by the latest volume of import tariffs before they went into effect. These have been put on a 90-day pause, and instead they maintained the recently imposed 10% tariff on nearly all global imports. The only exception to this one was China. China continued to have their lovely 125% effective immediately tariff kept in place. So that's what we're looking at on Wednesday. Since then, we've actually had a small correction. So coming to us from Yahoo Finance, I will say I think the language of this one kind of tips their hat about which way they favor the Trump administration. Hint, it's not in the good direction. So they do have a nice graphic here for us, though. So we have how the U.S.-China trade war blew up. Here's the timeline. February 1st, days after taking office, Trump imposes a 10% tariff on all Chinese imports. That's on top of existing tariffs from the first term and Biden era. February 4th, China retaliates with 15% tariff on U.S. coal, liquefied natural gas, and 10% tariff on crude oil, agricultural machinery, and large cars. March 3rd, Trump raises U.S. tariffs on China to a cumulative 20%. March 4th, we get China countering back with a 15% tariff on chicken, wheat, corn, cotton, and then 10% on a bunch of other agricultural products. Need this one. April 2nd. As part of the Liberation Day agenda, Trump raises tariffs on China to another 34%. Cumulatively, it's up to 54% now. April 4th, China responds, additional 34% on tariff U.S. goods. April 7th, Trump retaliates against China by imposing another 50% tariff, cumulatively 104, waiting on their call. April 9th, 2 days after, China implements another increase to 84%, and 104% duties take effect. April 9th, we do get the announcement of the 90-day tariffs while raising tariffs on Chinese imports to 145%.
Yep.
All right, gentlemen, is there any other news that I'm missing? Because I would not be surprised if there's stuff that came out like within the hour.
Let's focus on
let's look at this
the
first.
weekly stuff first, Z, because I can give you the shitstorm that happened over the weekend, and there was a lot of shit storming around.
Yeah, focus one thing at a time. I agree with you, Jay. Let's focus on what this is here. You want to give your thoughts first?
I've been talking a lot, bro. You go ahead.
All right, perfect. So honestly, everything that you've said so far, Zenith, I didn't really have any issues with. I actually had a pretty look. I have a mixed view on tariffs, right? It's a risky proposition to get into a trade war, but there are reasons to do it, and can be good outcomes for it. So where this will go, we shall see. What you've shown so far, I've actually was pretty much a fan of overall. I liked the start of tariffs. I liked getting countries to the table to start talking deals. I liked the opportunity to move things. Did I like everything that happened with tariffs? Do I like how Trump sort of alienated us against Mexico and China? No, not particularly. Didn't necessarily like how it went down with our two closest neighbors. But overall, I get the idea of why he did all of these things, right? Get people to the table, get fentanyl stop coming into our country, get things settled. And look, there are a lot of countries that have been taking advantage of the United States, not just from a tariff standpoint, but just from a rules standpoint, right? There's more to trade than just tariffs, right? It's rules and regulations of what can come into your country. There's a lot of factors that go into there. One of the people that give us the hardest time, obviously, is China. China has never played fairly by anything that happens with the World Trade Organization. Okay, and I'm going to show a video on this later about it. But it's always at an uneven playing field when it comes to the United States and China. So Trump rolls back tariffs, except on China. Everyone's like, wow, this could be really good. This was to pinch China. This was to put pressure on China. This is a great idea. Okay, up until all of this, I thought, okay, this could all be good. Still taking a wait and see approach because of how risky tariffs can happen and how getting into a trade war can be. But when it comes down to it, is China has issues with the entire world and no one has pushed back against them. They either devalue their currency, they sell things into countries at a cheaper margin, or they sell the exact same things by stealing intellectual property and not being able to litigate against these companies. So there's nothing fair that goes on here. So up until what you showed here, I don't have a huge issue. There are some things within that worry me, but overall, I see a plan. I see a semblance of a plan here. But then we'll have to talk about that after. So that's sort of my initial thoughts on what took place during the week.
Yeah, fair enough. Go for it.
Go ahead, Z. No, go ahead. Good.
All right. I think it's crazy to say that we're still in the very early stages of this because there's a lot of moves on the chessboard to be made, and there's a lot of counter moves that are also going to be made in response. The reason that this is the news item that's been dominating the news cycle and the markets and largely even most political discourse is because this is a disruption to the business environment. The business environment does not like disruptions. Any sort of change is going to be seen as volatility either direction. And as we've seen, the volatility is very, very high right now. Until we get some sort of actual conclusion, like we talked about last week, saying that we're going to have to wait for a more stable business environment before we see a more return to normal, and we can see people actually kind of make, not just people like running businesses and governments, but individual investors and retail investors getting to the point where they can build clear strategies about what they see coming down the pike in the near future. As regards to the tariffs, I think that we really haven't gotten a great answer to the question of, are the tariffs being imposed for the sake of tariffs, or is it a negotiating tactic? I think that when Trump was in the Rose Garden, he was announcing it, it was very much in regards to these tariffs are in place to try to reduce the net export effect or the net import effect from the United States to make up for that trade deficit. Since then, we've seen that a lot of countries are trying to come to the negotiating table to try to negotiate a better deal to get the tariffs reduced. The negotiation tactic route is saying that, look, we're raising tariffs because other people have tariffs on us. If we want to get rid of those tariffs, we can turn up the pressure with regards to this and then use that as leverage to get both parties to come back to a more neutral or a reduced tariff area. I think that the language from the Trump administration is kind of confusing based on what I've been watching over the last week, because they're kind of playing both hands here. They're playing it from the angle that Donald Trump is big on the whole export debt kind of idea, and that I think there's a lot of truth behind that, which is that tariffs to protect a domestic industry, to either ramp it up or to protect very key critical assets like national security, because you don't want to be reliant on steel from China if we're building an army to combat China, who's our biggest geopolitical rival, that kind of thing. At the same time, though, I think the idea there's a much deeper and more convoluted explanation of this whole thing regarding the net export import idea. One of the popular phrases I've been seeing online lately is people saying like, well, I have a giant trade deficit with my local grocer, but that doesn't seem to be an issue. It's like, yes, that would be true. But then the other issue is what happens when you run out of money? Are you still going to be able to run that trade deficit with your grocery store? The answer is no, without going into debt, which, by the way, in case anyone's been watching, the U.S. is very, very heavily in debt. I am going to give
they tend to have no reservations about increasing that debt ceiling.
Exactly. By the way, I'm going to give a quick shout out here to friend of the channel, Christian Hines. He's the co-host on the Nick Freitas YouTube channel. Nick Freitas, for those at home that don't know, he is a former delegate of the House of Delegates in Virginia. So he's like a congressman, but for the state of Virginia, effectively. Recently stepped down, but has been talking about a lot of the stuff, specifically the Federal Reserve, the US dollar, all that stuff. So this episode right here, The Truth Behind Tariffs, Nick is not on this episode, but Christian, the guy who is our guest for the book club, was this guy right here. He runs through an economic hypothetical scenario talking about the parable of the land and steel and the land of gold, and shows how if you continue to continuously run a trade deficit of constantly importing without actually doing any exports of your own, you're going to actually start to run out of money. Once you run out of money, you either have to print money or go into debt. And once you can't do that, no one wants to take your money or your debt anymore, then the only thing left you have to offer is the literal businesses and land and property inside of that country. So I know 2-hour podcast. This was fantastic. If you're into this kind of thing, I highly recommend it. Nick Freitas seems like a very valued or very principled guy, and I think Christian falls along the same suit, but from the more Gen Z or millennial lens itself. Back to the tariffs, though. We have a lot of change. Change is the name of the game right now. Change makes the market scared. The markets are scared of recession. If we have a recession, then that's the case of large traditional finance. We've been talking about this entire cycle. Those are the people that have been putting in a lot of money, that have actually been making the moves when it comes to the Bitcoin, the Ethereum ETFs, and all the proposed ETFs coming down the pike. If that size money starts to get scared in this business environment, it is reason to believe that they still view Bitcoin and crypto as a risk-on asset, which means they only want to buy and hold crypto during risk-on periods. If we go into what is potentially a recessionary time or fears of recession, then that means the risk-on assets come off, which means further Bitcoin depreciation price. So I guess that's your little A to Z of how does a chicken tariff from China affect my Bitcoin and Ethereum. I did see a somewhat viral post the other day of someone posting the Ethereum chart when the aluminum tariffs got announced, and he's like, oh my gosh, is Ethereum made of aluminum? What's going on?
So it's definitely interesting point of conversation in regards to, is Larry Fink and BlackRock going to put their money where their mouth is and actually stand behind their word that they believe Bitcoin is digital gold and that Bitcoin is the future and that they don't treat it like a risk asset? Definitely an interesting point of conversation. And we shall see if we do enter a recessionary period. We'll see how they treat it. And then everybody's naked out in the open, and we can tell exactly who's telling the truth and who's not. In regards to the events that presided over the week when it came to the tariffs, I'm of the very same opinion of Brendan and of Zenith. I think inherently speaking, I think that Donald Trump, regardless of how erratic his behavior is, that there is a plan. This is not so in my personal opinion, and this is shared by many other analysts on crypto Twitter, is that the reason why he imposes these damn things on these other superpowers is to find out exactly who's willing to come to the table and negotiate and who's not willing to come to the table and negotiate. Like who's out here trying to have a dick measuring contest with the United States and Donald Trump. And we found out that almost every other country where tariffs were imposed, at least according to the White House, are all willing to come to the table and negotiate with the United States. And we haven't had any contrary news to that particular scenario. The only other people who's left out there, hung out to dry, is China, because they're the only ones who did not get the benefit of the reciprocal tariff being reduced down to 10% and extended towards 90 days. It's just them. And so Donald Trump pulled the tide back in, and then he wanted to see who was swimming out there without any clothes, and it was China. So in that scenario, right, I'm extending the man some grace here. He's a successful entrepreneur, 2-time United States president. You gotta give the man some freaking credit, okay? Right? He's not stupid. He's not stupid. At least when it comes to negotiation and making money, right? You don't become a multi-billionaire and a 2-time United States president, TV star, WWE superstar without having some competencies in some areas of life. Okay? So I'm willing to extend the man benefit of the doubt. What I don't like, but part and parcel of his personality, is just how erratic he is. The one of the take-home messages of this entire last week was, do not get caught in the middle. Donald Trump and the markets are going to give you whiplash, especially with what happened over the weekend, which I will share with you folks now, because I have a timeline of that event. Z gave you a timeline of what happened throughout the week, and it seemed like we got some kind of resolution. It seemed like the plan was working. Okay, China's out there swimming naked, pulled the tide back in, everybody else fine, willing to negotiate. The attention right now is on China. And at the tail end of last week, we were like, okay, it seems like there's talks. Everybody in crypto Twitter, the White House setting up a call with Uncle Xi, everybody willing to negotiate. And then this happens, okay? So I'm going to share my screen here. These particular series of posts are from Walter Bloomberg.
This is wild, by the way.
This is
like
absolutely wild. Okay, so April 12th. So this is April 12th. I think was either it was Saturday, right? What is today?
Yesterday, yeah, Saturday. Yep.
Saturday, April 12th. Okay. U.S. publishes tariff exclusions now for specified products applying to computers, smartphones, and the tariff exclusions also apply to chip-making equipment, and the exclusions apply to the so-called reciprocal tariffs.
And other electronic devices, right? So everything that surrounds that stuff.
Where do the majority of those things come from? Just shot in the dark.
China.
From China. Right? So
Shout out to Large.
What happened? What happened to imposing 145% tariffs on them when you retconned the majority, you retconned that on the majority of goods that they export to us? Seems counterintuitive, right? Seems counter to the message that you left us on Friday. Same day, April 12th. We're still on April 12th. White House spokesperson Trump has made it clear that America cannot rely on China to manufacture critical technologies such as semiconductors, chips, smartphones, and laptops, but apparently you removed the reciprocal tariffs on those particular goods and products. Like, again, whiplash much? Okay.
The best case. Sorry, go for it.
Let me get through the timeline of events here, see.
All right,
this really,
Go.
like, dude, you cannot be kidding me. Like, back to back, it was ridiculous. Trump says exempting semiconductors from higher China tariff. Okay. Trump says exemption is retroactive to April 5th. Duties since April 5th on excluded chips will be reimbursed. So it's like, on one hand, you're like, we can't rely on them. But now we're going to retcon those tariffs, and all of the tariffs that they paid going all the way back from April 5th, they're going to be reimbursed. But we can't rely on them, right? No such thing. And then China comes out. China comes out and says, U.S. tariff exemptions, small step to correct wrongdoings. This is from China. And then bro. And then freaking Howard Lutnick. I have a clip of Lutnick, right? Howard Lutnick. I think he's either on Fox. We'll get to the clip later. And then freaking Howard Lutnick comes out and says, semiconductor, electronic tariffs will come in a month or so. Like, what the hell is going on here? What the hell is going on here? So you're gonna retcon it, right? You're gonna retcon it, but a month from now, they're gonna be back. Like, oh my God,
Jay, I have a pretty good tweet from Donald Trump that I think we should read.
Go for it, bro. Go ahead and share it, man. And then I have the clip from Lutnick to play for you guys.
Let me share my screen here. You want to play that first, Jay, and then I'll show mine? That's fine.
Yeah. Because
I think mine's probably it comes after this. So
yeah. So this one's from ABC. This is in regards to Lutnick. So Lutnick's, this is not a permanent sort of exemption, which is why he's like, we're gonna slap another one on them in a month or so. Phones, chips, and panels face new semiconductor tariffs in 1 and 2 months, despite Trump's tech import exempt. Like this, like whiplash, guys. Okay, so here's the man. Here's the man himself. Let me make sure I'm sharing with audio. Let me know if you guys can hear this.
Nope.
Let me blow it up.
Howard Lutnick, Secretary Lutnick, thank you for being with us this morning. I really appreciate your time. So let's start with that news.
It's my pleasure.
Let's start with that news late Friday, that this exemption on electronics, smartphones, laptop computers, and the like. What's the thinking? Why the exemption?
Well, if you remember, over the past couple of months, President Trump has called out pharmaceuticals and semiconductors and autos. He called them sector tariffs, and those are not available for negotiation. They are just going to be part of making sure we reshore the core national security items that need to be made in this country. We need to make medicine in this country. We learned it during COVID. We need to make it in this country. We need to make semiconductors, because if we don't own semiconductors here, remember, virtually all semiconductors are made now in Taiwan and they're finished in China. It's important that we reshore them. And so the president is going to come out with his policies on semiconductors and pharmaceuticals. They're going to be outside the reciprocal tariffs. And he was just making sure everyone understood that all of these products are outside the reciprocal tariffs, and they are going to have their own separate way of being considered.
But wait a minute. I'm asking you about the exemption, not about. I mean, the notice that went out Friday night saying that electronics, a wide range of electronics, including smartphones, including components used to make microchips, that these are now exempt from the reciprocal tariffs. Why that move?
Well, remember, those products are going to be part of the semiconductor sectoral tariffs, which are coming. So you're going to see this week, there'll be a register in the Federal Registry. There'll be a notice put out. That is different types of work. So we're going to do that. We did that in autos. The president's going to do it for pharmaceuticals, and he's going to do it for semiconductors. So all those products are going to come under semiconductors, and they're going to have a special focus type of tariff to make sure that those products get reshored. We need to have semiconductors, we need to have chips, and we need to have flat panels. We need to have these things made in America. We can't be reliant on Southeast Asia for all of the things that operate for us. So what he's doing is he's saying they're exempt from the reciprocal tariffs, but they're included in the semiconductor tariffs, which are coming in probably a month or two. So these are coming soon.
There you go, guys. It's a 4-minute clip. You go watch it. This is on CBS. It's on Cointelegraph. But you see why there's so much confusion and why it's giving the market so much whiplash. We're gonna reimburse you for the duties you've already paid, right, from the reciprocal tariffs. But in a month or so, we're going to slap on new tariffs, because even though we're going to reimburse you, we're going to put those in a new set of tariffs. We want them to happen here in the United States, right? But we're going to reimburse you, right? So we're not going to penalize you for your exports over here, right? But then we're going to slap on new ones in a month or so. It's like hot and cold, back and forth. They're like, this is what's upsetting, right? Like so far, there's absolutely no clarity, and it's jerking the markets back and forth, up and down, all around. Like, you guys have any comments on this in particular?
Yeah, I mean, I do, but I also want to piggyback this real quick because I think it goes to it. So, and then Trump puts this out today. So I agree, Jay. Like the back and forth, the confusion, and I'll get to my company specific conversation here in a little bit. But let me just read through this. Nobody is getting off the hook for unfair trade balances and non-monetary tariff barriers that other countries have used against us, especially not China, which by far treats us the worst. There was no tariff exception announced on Friday. These products are subject to the existing 20% fentanyl tariffs, and they are just moving to a different tariff bucket. The fake news knows this, but refuses to report it. We're talking to look at semiconductors, whole electronic supply chain, and the upcoming national security tariff investigations. What has been exposed is that we need to make products here in the United States, and that will not be held hostage by other countries, especially hostile trading nations like China, which will do everything within its power to disrespect the American people. We also cannot let them continue to abuse us in trade like they have for decades. Those days are over. The golden age of America, which includes upcoming tax and regulation cuts, a substantial amount of which was just approved by the House and Senate, blah, 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 blah. We'll get more jobs in the United States. So that's all I got for that. But that kind of just further says exactly what you're saying here. Is like, why couldn't there have been one consistent message about how this was going to be implemented? Because I don't think even what they're saying is necessarily wrong per se. I don't even know exactly what they're saying because they won't give it to us in a manner that is easy to understand. And even if they had a plan in place, they didn't communicate it in a way that I personally or any of us can understand without going back and forth 10 times. I'm still trying to figure it out.
Here's the thing. Also, my biggest issue was that if you're going to slap on tariffs, if you're going to put them in a different bucket and give them separate percentages when it comes to the tariffs, why you going to reimburse them? Why don't you call it, you guys been taking advantage of us this whole time? Like, why reimburse them, bro?
Why not just say this is what we're going to do until we finalize our tariffs on these sectors, right? Like you're gonna put them out there. So if you're gonna do that, say, okay, hey, these ones are temporary. They're gonna change to this in a month once we finalize whatever this regulation is that we're putting together. Is that what you're trying to say?
Yeah, sure, but I still don't get why you're gonna reimburse them. Like, why reimburse them?
What you're saying is they should have kept them and then changed in a month once they have that regulation written.
It's like, we're gonna give you back the money, but you gotta pay us again in the future.
It's like, I'll pay you Tuesday for a hamburger today.
The whiplash is very real. I guess I'll try to play the other side of the coin on this one. As far as the reimbursement goes for tariffs, it's the tariff is a tax on the importers. So the reimbursing importers, which theoretically are business people inside of the United States. Brendan, I think you're entirely correct, though. Messaging from this one has been very, very poor and just unclear. And as we talked about earlier, the business environment likes consistency and clarity. This has not been clarity in the least. The best read that I can give to this situation is, because we look at the exemptions that went into place, they largely for electronics and semiconductors. Yeah. The great irony about semiconductors is, what do you need to make semiconductors? Oh, it's more semiconductors to get factories online and whatnot. So I'll try to give as much benefit of the doubt as I can on this one, which is that theoretically, how I can read this from the most positive stance is that understanding that the tariffs are immediate, quick, and they've come in very quick since Trump has been in office. That is not enough time for business to spin up inside the United States. As much as we wish we could just build factories immediately, we cannot. So if the tariffs are in place while you're trying to build the factories, which need the goods that you're tariffing to build the factories in the first place, then that's just going to be an additional cost. If the goal is to incentivize business inside of the United States, then that means you need to incentivize them in monetary ways that make sense mathematically. If the tariffs change that math, then it means that they're unable to build the businesses that are necessary to respond to the tariffs. So again, the best possible scenario here is they're trying to give people a little bit of onboard room or a little bit of runway so that say, hey, these tariffs are coming. I understand that some of these products are necessary to be able to manufacture these products. So if you're interested in getting into this business, the opportunity window is now.
Yeah, I will say,
That was the most, not just graceful, but geez, man, couldn't you have just explained it to us like that? It would make a lot of sense, right? Yes, we want to bring manufacturing here to the United States. We need some runway, which means we cannot pigeonhole people who want to build here by dumping the costs on them. And so let them build first, and then we can move forward from there, right? And then we can reevaluate from there. Such a simple explanation, like graceful and simple explanation. But it's like, don't you have anybody in your cabinet that could give the American people that kind of explanation?
Theoretically, they should have those people, and they should be making that pitch. I think they might just fear too much that TikTok brain rot has affected the American public, which I would argue there's a degree of proof behind that. But it's the idea that, are people going to sit down and listen to a detailed, well-thought-out argument encompassing the entire state of geopolitics? The answer is probably not. I mean, nerds like me out there will, but that's just because I'm a bit entrenched, shall we say. At the same time, though, you're entirely right, which is like that message, it's not super hard to communicate. Granted, it might also require some people take it with a grain of salt and also have a larger understanding of the business environment. But as far as communicating and messaging, yeah, that's something that they need to improve on. And the reason they need to improve on it is so that you can, I really cynical, but it's like political cynicism, which is that you need to communicate these plans effectively so that the original plan was, look, we're going to experience some short-term pain to correct the economic issues that have been plaguing the United States for the last like 4 or 5 decades effectively. That will come with some pain. If people are just experiencing pain, they're just going to blame you because you're in power and they think that you did it. If you are able to communicate why everything is going on, and people actually are able to believe it and buy into the message that, like, yes, we are correcting for all the issues that we've been dealing with and just largely ignoring. All this stuff has really been swept under the rug. I personally think largely due to monetary policy and the ever corrosion of the US dollar and just the racking up of debt. But at some point, the bill comes due. You either default on the debt, you either print to super inflation for the currency, or you deal with these issues and you accept the downturn in the economics in the short term. I think that if you can get the messaging on point, people are going to be more apt to that. But as it stands right now, they have failed to do that, and people are going to be very upset. And when people are upset, they don't vote for you. Fortunately, we have a 2-year political cycle here in the United States as opposed to the 4-year presidential, which most people think of. But if you look at it closely, it's, to get stuff done, you got to have the House, the Senate, and the presidency. Right now, they have all 3 of those. You got to maintain it. Trump realistically has about 1 year to get this start going towards the upside so that he can point to the data and be like, look, it's working. That will get people back on board. But as it stands right now, this is, I think, largely turning off the American public.
Yeah, so it is. Volatility in mixed messaging. You can take one volatility. You can't take 2 mixed messaging, right? That's where it comes into play. I don't mind some volatility if I see a plan in place. When I start to see messages getting mixed, where I start to see them, going back on what they're saying, even if they had a plan and they miscommunicate it so it looks like you're having issues, then that's bad enough for the American public. Because guess what? We can only judge you on what you're coming out and doing, right? And if it looks like you don't have a plan in place, then it's going to be hard for us to accept that, right? And say, okay, I can wait. Now, I still am taking a wait and see approach because I still think a lot of these things are important, and I still think that this trade battle with China isn't just about trade. Okay, let's not talk about China outside of trade is not one of the largest potential enemies to the United States overall. So how do you beat China if they have more people and better automation? You can only do it through currency devaluation and hurting them in the pocket. That's the only way. So I think there is more to these trade wars than just getting better deals, although I think that's a big one. Can I play a quick 2-minute video by Kevin O'Leary, who does a lot of work, obviously in business?
My man said 400. My man said 400%.
400, baby. So I'm going to play this. There was also for anyone who wants to, April 9th, he also sat in front of the Senate committee and he had a little bit of a longer conversation about this. And I think that one gives you more information. It just takes a little bit longer. So I'm going to play this clip.
% tariffs in China are not enough. I'm advocating 400%. I do business in China. They don't play by the rules. They've been in the WTO for decades. They have never abided by any of the rules they agreed to when they came in for decades. They cheat, they steal IP. I can't litigate in their courts. They take product, technology, they steal it, they manufacture it, sell it back here. Never has an administration.
400% tariffs? What would that
I
look
want
like?
Xi on an airplane to Washington to level the playing field. It's just not about tariffs anymore. Nobody has taken on China yet, not the Europeans, no administration for decades. As someone who actually does business there, I've had enough. I speak for millions of Americans who have IP that have been stolen by the Chinese. I have nothing against the Chinese people. They brought great literacy, art, and tech to the world. The government cheats and steals, and finally, an administration, you may not like Trump, you may not like his style or his rhetoric, finally, an administration that puts up and says enough. 400% tariffs tomorrow morning.
So I'll stop it there. I'll stop it there.
Bro, I'm telling you, man. I'm telling you. I know a lot of people aren't fans of Kevin. He hit it right on the head. Right on the head, man. All's fair in love. All's fair in love and war. I guarantee you, Donald Trump read The Art of War. Guaranteed. Nobody's playing fair, man. Do you think people play fair when ultimate power? We're talking about ultimate power here, right? What do we say about power? Power corrupts absolutely. When you're fighting for ultimate power and ultimate control, you think these people are going to fight fair? So here's an example that Jordan, I think it was Jordan Peterson that gives, right? Let's say you're playing a pickup basketball game with somebody, and you're like, yo, whoever wins this game, $1,000 on the line. Think motherfuckers are going to play fair for $1,000? People have killed for less. You think people are going to play fair on the world stage when it comes to who has the world reserve currency? Who got the biggest dick in the entire globe? You think they're going to play fair? They're not going to play fair, man. So yeah, Kevin hit it right on the head. And for the first time in how many decades, we've had a president who recognizes that. You might not like him, but he's willing to be the bad guy so that we can finally get finally get a leg up on these dudes. Right? The Chinese wrote the book on The Art of War, man. They're following it to a T.
That's true. By the way, real quick for the folks at home, we will tie this into crypto very shortly. I promise. I know you might not be here for international diplomacy and economic talk the whole time, but we will tie it back to the crypto stuff. Jay, I think you're entirely correct. I think one of the issues that comes up with this conversation, though, is that the use of tariffs is one of really the only utilizations of soft power when it comes to economics that you can have without like full on sanctioning people. And it's one of the only other alternatives you can have besides actually, like, I don't know, invading a country. And it's like Kevin O'Leary said, China is notorious for intellectual property theft. And you have to take it up in Chinese court. And do you think they're going to favor you? The government that is actually advocating for reverse engineering as much technology as they possibly can on the planet? The answer is going to be no. So that comes to the answer of tariffs. But ultimately, tariffs technically are a tax on the end consumer. You saw it from the lady in the clip there. She mentioned that you think Americans can handle a 400% tax. It's yes, the Americans are, or the end user is going to be the person that pays the tax ultimately, because that's just how it works. But if the goal is not to tax the citizenry, but it is to stop the bad activity outside of it, the way you're stopping the bad activity outside of it is by changing the activity inside your own borders where you do have control. Granted, yes, China produces a lot of stuff that people use on an everyday basis. At the same time, though, it's like it's a poison, it's a parasite, which is that if you are personally inside of your life enjoying these widgets, whatever you want to call it, that's great for you if it's nice and cheap. At the same time, though, understand that there are greater political ramifications and international ramifications. If you are able to connect those dots mentally, that's how you can get the average person to understand what is going on here, as opposed to just being like, Donald Trump raised taxes on Americans. Bad.
Yeah. And for example, if you watch Kevin O'Leary in front of the Senate committee, he has a very specific example, right? Like, okay, you have these car mats that are made in the United States in Louisville. They're great. People love them. And then somehow the exact same mats with the exact same company name are being sold to other countries out of the same factory. In fact, where they had done the prototypes in China, right? And there's no way to litigate. There's no way to go to court because you're not even allowed to go to China and bring this against them. So you're not even allowed to even go to the court system, much less get a fair ruling. Okay, so it's pretty incredible, and this has been happening for a long time. And it's kind of sad that it's come to this for people to start talking out against it. That's actually something that I'm a little bit upset. Like, did they not get a platform? Why weren't businesses and people like Kevin O'Leary out and about saying this for so much longer? Maybe he did. Nobody listened. That's possible, and I could be very well in that camp. But I don't think that people were screaming this enough if they really cared that much, which they should.
Agreed. And by the way, gentlemen, I don't know if I share this with you guys or not, but I have personally had my IP stolen by the CCP, so I got an axe to grind with those guys.
Dude,
did a hand-drawn logo for a YouTube channel I was running, and they straight up ripped it off and used it for a cheap, crappy like engraving company that they were running. I was like, all right, I see you.
Flattery, baby. Flattery.
Dude, remember, I don't know if this is true or not, but Kiyosaki tells the story a lot when it comes to the Chinese. He's like, yeah, man, I had a gold mine in China, and they just took it. They just like, it's ours now.
Yeah, Kiyosaki asked about how his gold mine was going one day, and they looked at him, they're like, oh, you have a gold mine?
Gold mine?
We don't see that. I see our beautiful gold mine that's working wonderfully. Where's yours? I don't think I can see it behind my piles of gold.
Yeah, I'll say one other thing about China, because they did say that they're going to stop shipping rare earth minerals out of China. And here's one thing, and we can't get into this too much right now, but we're talking about all these rare earth mineral deals, right? Okay, so you dig up these rare earth minerals, and then what happens? Jay, where do you have to go to process these rare earth minerals?
In the factories?
Almost 90% of these factories are in China. So you can get them out of the ground, but you can't refine them unless you send them to China and they send them back to you. So that's another issue that we have to figure out as well. There's a lot of
cobalt,
things.
lithium, magnesium. These are all very highly important, highly sought after, hard to get. And unfortunately, the manufacturing process for using it and refining it is unfortunately rather dirty. So yeah, China kind of is the head honcho when it comes to this. This is why they do the Belt and Road Initiative, so they can get inroads to all the countries that have these materials. That's why they do this.
And guess who didn't want to do the dirty factories to refine their own minerals? The United States and the EU.
Bro, I'm telling you, man, you think, as much as I love the United States, man, I love America, bro. America's the best place in the entire world. You think, here's a question that I want to ask you guys, that I want to ask everybody in the chat, that I've seen around on Twitter, and it's not a bad take. You think that let's say we bring all these manufacturing jobs here back to the United States. It's like AI is not going to do it, machines not going to do it. You're going to give jobs to the people. You think these entitled, short attention span, new generation kids going out of college looking for a job, you think they're willing to actually do that type of heavy blue collar work, repetitive, monotone?
Well, I will say no, but I'll say that they won't need to, because most of it should be modernized, and it should be done by AI, and it should be done by automation, which means the people that need to do those jobs are at a much higher level. That's what should happen. Now, that takes a lot to do that, but
wasn't one of the main pitches? What does that? We're gonna bring jobs back. Not
you
the
still get a lot of
AI,
jobs. You just get higher level jobs there.
Well, that's true, but I think if you modified that pitch, was that we're gonna bring jobs, but the jobs are gonna be taken by the AI, and then the jobs that are gonna be up for grabs are the people who know how to utilize AI, that might not be received just as well. It's like, when people started telling you to learn to code, that wasn't very well received.
Well, it depends on which side of the learn to code you were on. Journalists, they did not receive that one very well. I'll give you my answer here, Jay. I'll say yes and no, actually. And the reason I say no is largely because what Brendan also just said. The reason I say yes is because we've seen a resurgence in trade school and the trades coming back. I don't know if full-on Gen Z is taking it back, but at least the youngest millennials and the oldest Zoomers, that's the crowd that's actually embracing the trades. I think that there is a yearning for solid, stable employment. I think a lot of the young folks, especially, like, do fear the AI takeover and the AIization of everything that we do. I don't think it's especially the way we've seen it play out. is I think that what we thought were going to be the jobs last replaced by AI have been the first, and vice versa, which means that it's going to be a lot easier to get AI to start making YouTube thumbnails and music or whatever. It's going to be a lot harder doing the nitty gritty of actually trying to get AI operating machinery in harsh climates, harsh environments, harsh operating conditions to like go mine things or raise crops, raise animals, that kind of stuff. I think it's hard for it to do that. And I think that if the opportunity is available, people will seek it. I think that this issue might speak more to kind of like a crisis of purpose that's kind of been lacking in the postmodern world. But as far as will the youngins actually get in the factory, if you give them a good enough reason and a good enough incentive, the answer is yes.
Yeah. It's crazy how, man, we got on so many tangents
I
here.
know, I know.
Crazy how
Yeah.
people argue for postmodernism, and then you look at the postmodern world, and you got a world full of youth with no purpose, no drive, no meaning. But yeah, man, we love the postmodern, bro.
Pros
Man.
and
what,
cons are things that we can't get into tonight. Anyway,
That's
So-
true. I do want to bring it back real quick, though. All right, gentlemen, we just went on a good tangent there for talking about tariffs and AI. We're a crypto show. What are we doing here? Why does this matter to us? I'll tell you what. I'm going to lay out I'll give you two scenarios, and then we can riff on if we think I'm crazy or if we think there might be some merit here. So, scenario number one, people might have heard me talk about this one before. So, tariffs theoretically are an increase on the tax and business environment, a decrease in GDP growth for 2 consecutive quarters. The last time I checked was the term for a recession. During a recession, people are a little bit of crisis. It's harder to get businesses going. So the Federal Reserve reduces interest rates to make the cost of borrowing money easier. They do that to incentivize business opportunity creation and growth. That is the classic transformation from quantitative tightening to quantitative easing. Last time we saw Bitcoin make a good run, we had the same exact transition happen, which is that the US dollar becomes more inflationary, value drops, people look for a safe haven, they look to crypto sometimes, and that can cause the pump there. You think that is a possible scenario for why this stuff matters? Do you think tariffs might be a key point to making that kind of future possible?
Yes. Do you know why? You know what happened? You know what happened last week at the end of last week, man? When shit really hit the fan? What happened to the long end of the yield curve, man? What happened to the 10-year, the 30-year? What happened?
Oh, they inverted, baby.
It fucking skyrocketed, bro. It skyrocketed, which means that the Chinese and others, a lot of the attention has been on the Chinese. They're dumping their bonds, right? They're dumping their U.S. treasuries, anywhere from your short-term to your long-term stuff. And it's crashing the price of the bond market, which is jacking up the price of the long end of the yield curve. What happens? Well, Trump is trying to refinance the damn debt. We've got about $9, give or take, $1 trillion worth of debt coming due this year, with more than double that coming due within the next 2 years or so. And the long-term yield, so the long-term rates are now sitting higher than when Joe Biden was in office. How ironic would it be if Donald Trump had to refi the debt at a higher rate than his Democratic opponent? And guess what happens? You know the news that we got last week or sometime over the weekend when, I don't know if this has been verified, but apparently the Fed says we're ready and able and have the tools to stabilize the market. And that's exactly what they're going to do. Because if the price of US Treasuries keeps giga crashing and that long end keeps increasing, I don't think Donald Trump nor Jerome Powell wants to have to refinance the US debt at those rates. I highly doubt it. Which means, shot at the dark here, Jerome Powell is looking at this stuff happening. He's like, how could we possibly keep adding to that problem by not stopping the runoff? And if they stop the runoff, right, they're not now selling you their US Treasuries, right? That's what the runoff is. By definition, that is a hard stop to QT. And what did we see last cycle when the Fed stopped QT? ETH Bitcoin bottomed. A few weeks later, ETH USD bottomed, and we giga pumped into 2021. So a lot of people said China forced Donald Trump's hands to be a little bit more hands off because the long end was spiking. I'm like, I don't know about you guys. I don't want to have to refinance my $9 trillion debt at like 5%, 4.5%, 4.8%. I don't want to do that. And so a lot of people are saying they force his hand.
That's
But
fair.
But is it part of the plan where he's like, well, he wants a stock market. He wants the markets to keep pumping, right? He wants to be able to claim, I had the greatest stock market of all time. Then it's an indirect way of being gracious here. It might be an indirect way of him forcing Jerome Powell's hand. Jerome Powell's like, one move he could be like, I can't keep adding to this problem. The U.S. Treasury, the bond market is crashing. If I don't stop the runoff, I'm going to add to the problem. I'm going to have to have a hard stop to QT to not contribute to it. And then if push comes to shove, I might have to start absorbing some of that incoming supply to stabilize the long end.
Mm-hmm.
Right?
Is it all part of the plan?
Right? He's going to start having to inject liquidity back into the market. By definition, QE.
Which is what he's been asking for since he got elected, right?
Isn't that what we want?
So it's it's an interesting conversation. With the CPI numbers down, with the core CPI down, lowest numbers since March 2021. I said it in our chat. I think it's time to start some QE. I think it's time to start cut rates. I probably would do it in May, especially the volatility that's happening in the market. Look, Jerome said last time that this is transient, right? When inflation started during COVID. So he took too long to start raising rates. He might be holding for too long if he doesn't cut in May. And this is one of the things. He's really good about, what do I call him? Jerome the metronome, right? He doesn't make big changes. He generally stays the same. However, sometimes to a fault. And if he doesn't cut in May, it might be to a fault. My opinion.
How about you, Z? What do you think about this stuff? About the long end, about the Fed having to start absorbing some of that incoming supply and them having to start buying up bonds in order to stabilize the price and injecting liquidity back into the market, effectively starting QE. Like, you think that's certainly possible? Like, what do you think, man?
I think it's certainly possible. I think he actually had a really good point there, talking about we have to refinance debt, and maybe Jerome Powell lowers the interest rate so that we don't have to pay more interest on our own debt. That one's actually a particularly interesting point for me. As far as the bond market goes, yeah, a crash in the bond market would not be great, especially considering if we do have something like that, then it means that we're also looking at potential downside for the overall like S&P 500 market over maybe like a 1, 2, 3 year period that we're looking at there. Something like that, where if you have that kind of scenario and then you also have the bond market also collapse, that's kind of like the worst of both worlds. Because theoretically, if the stock market is down, people should at least have some faith that their bond market is going to be okay, if not doing much better than the market is. It's the ability to shift capital around based on where you see the risk profile going. If you get the scenario you laid out, it's very possible that both markets kind of get wrecked at the same time, and that would be the worst of all.
You imagine it's like, well, all of us tried pulling our levers, and it seems like it went nowhere.
Look, it's scenarios like this that get me. Scenarios like this get me to the point where I'm talking about, like, okay, do we have a normal market condition, or we kind of approach the end of a period, which is that we've tried covering up these problems. We've tried doing the classic QT, QE cycle over time, but have we actually gotten to a point where that just no longer works? And I unfortunately think that it's more and more likely every day. The human history has never seen a country print money as much as the United States. Human history has never seen a single entity or group of entities accumulate as much debt as the United States currently has. These are actually unprecedented economic scenarios. So to think that something might actually change, I think it's entirely possible.
I will say, though, that if you look at debt as a percentage of GDP, they're not the highest in the world, right? There are a few countries like Japan. I think Japan's the highest, at least of large nations, off the top of my head.
Japan's pretty bad.
But I'm not saying we're doing great. I'm just saying percent of GDP still very high, very, very high, unsustainable. And at some point, it's either needs to be paid off or we're going to crash, which I think what they're trying to do is get some of this debt paid off, hopefully in the near future. That being said, we are at 10 o'clock. Z, can you bring up those chat shoutouts? I can run through them.
Will do. Although I have one thing that I think we do need to give to the audience before we actually get out of here.
Sure.
Apologies for the click. Apologies for the clickbait tonight, folks. But yes, the thumbnail and the title was hoping to talk about the SEC and the new chair of the SEC, Paul Atkins. He did get confirmed. Finally, we had the announcement he was going to be the guy back in January. And oh, look, it's April. Shocker. Government doesn't move very fast. Who to thunk? Real quick, from the Banking, Housing, and Urban Affairs Committee, Paul Atkins brings a wealth of experience and dedication to safeguarding our capital markets. His tenure will mark a pivotal moment to roll back harmful Biden-era policies, promote capital formation, and enhance opportunities for retail investors. Chairman Atkins will also provide regulatory clarity for digital assets, allowing American innovation to flourish and ensuring we remain competitive on the global stage. I look forward to collaborating with Chairman Atkins to reignite our capital markets, which are vital for economic growth, job creation, and innovation. From Chairman Tim Scott. All right. Apologies for that one. Yes, it is very important. We'll talk about this more later, probably in the Telegram. So scan that QR code if you want to get more on that. As far as shout outs go, we got a lot of people here. Brown, I saw your children yearn for the cobalt mines comment earlier. That got me chuckling a good bit. We do have Yellowtails in 7 days. And then I can't see the emoji, but it's either the ring or a bell.
Ring.
Yeah, the ring.
Yeah, well, actually, I think he's talking about the movie The Ring, where they're like 7 days.
Yeah,
I think he's probably referring to how dangerous the tariff game can be.
This one I think is actually slightly different. So Yellowtail is a hexagon poleskin. One of the stories I've been following on Twitter is the SEC has 7 days left to amend their complaint about Richard Hart before the deadline expires. So
I thought it was the 21st. My apologies.
We're in the end game for that. I know a lot of the Hexagon Polsky community, myself included, are very much excited to see this saga conclude. And with your boy Paul Atkins at the SEC now, I think the possibility of that actually happening just went up.
And I will say, shout out, Richard Hart turned his comments back on to his X posts. I don't think that was done without reason.
Agreed. People claim he's playing 5D underwater chess all the time, and well, this might be a move like that, or he might just like talking to people. Who knows?
Yeah, maybe.
All right, we got Brizology coming in here. He says China needs to learn to play fairly.
Sorry, Briz. All's fair in love and war. The Chinese wrote the book on war. They're not going to play fair, man. Not at the world stage.
Actually, not against.
And I think I'm not. This is not a criticism on you, Briz, but I think anybody who thinks that the people in power are going to play fairly with each other, that's naive, man. I'm not saying that you are. I'm just saying that thought is naive, man. You're talking about
that. Yeah. For anybody that caught book club on Friday, we talked about Stoicism from Marcus Aurelius, and they talked about how moral judgments and value judgments on things are what we get upset about, not the actual things themselves. So I understand that. Would it be ideal in a world where China played fairly? Yes. Do they have a need to play fairly? I'd argue the track record says no, as Jay is alluding to here. Yeah. Sorry to cut you off, buddy, by the way.
Oh, no worries, man. I mean, if I was them, why would I play fairly? I know, right? Jay's a bad guy, but like, bro, it's me and mine's first. And the Chinese are concerned about their people.
No, I don't even know if they're concerned about their people. I can't even agree with you.
That is, yeah, that's a conversation as well. Oh gosh.
They care about themselves individually.
That's true. We do actually have a question that is rather applicable, and shout out to Rhino927. He says, what do you guys think about the correlation between Bitcoin and the global M2 money supply?
Something we've been talking a lot about in the Telegram, haven't we, boys?
Yeah, there's a lag time, but they tend to follow each other pretty well. There's usually a lag time. M2 usually leads Bitcoin, but hopefully...
What's happened to the M2 recently, Jay? Took off like a rocket.
Yeah. So hopefully the pattern remains, but it would be nice if that was the case. It's what we all want to happen right now, right? We want that correlation to become tighter and tighter and tighter.
And by the way, shout out to a good friend of ours, Mr. Angry Twinkie. He has a YouTube channel, and you can catch him over on Twitter and in many Telegrams. He is a guy that has been watching the Bitcoin global M2 money supply and the offset. He's one of the folks to talk about that. He's got a lot of knowledge when it comes to this, and he's watching it very closely. So shout out to Twinkie. And by the way, Jay, you mentioned Wyckoff patterns previously in the show. I want to say another shout out to another buddy of ours and a guy who's also come on stream as special guest, Donovan of DIY Investing. He is a big he's been doing a lot of work on the Wyckoff structures, and he actually had a tweet this week talking about potential Wyckoff structure for the current position that we're in. I believe he was also talking about when we were in the accumulation or the sideways action of 2024. So check him out. Good buddy, good dude. But yeah. All right. Few more. Mexican lost in Asia. He says, I love every bit of this. I don't care how many sweatshops in China need to shut down. China needs to do better for its people. This one was also in response to the tariffs.
That's another thing, right? Like we tend to impose our values onto different cultures. Like believe you me, man, in a lot of Asian cultures, like children going to work when they're super young, that's not uncommon, man. It's
used
not
to be
uncommon
common in the United States too. But
like to the
changed.
degree, like the degree in the severity, like obviously you could have an argument there, right? But I'm like, it's very common in Asian cultures. So right, it's like, look, I get it, right? It's really off-putting to think about the sweatshops full of children, but like different culture, man. Different culture, different laws, different rules, different regulations, right? We can't impose all of our values and morals and ethics onto other people. Right? Some of us will agree, but there's going to be enough gray area and disagreement in between. Like Zenith wish earlier, right? Like we wish we would have like this standard of treatment with everybody, right? That the entire world didn't send children into sweatshops. Leave that to the adults. Let children be children. It's not going to happen.
That sounds like a philosophical argument, which would very quickly get me on a soapbox, which we have to avoid.
Yeah.
Alrighty, we got Crypto Stylist, good friend of ours. Shout out to you. She says, good morning, good morning, good morning. Good morning to you as well. You are in the different hemisphere from us, but glad that you can make the show as always. Fantastic to see you. And then last but not least, we have an absolute legend of the DGen Roundtable, Funk Master Hex, saying, ladies and gentlemen, good evening, raising a glass. Great to see you as well, sir. Thank you so much for tuning in. All right, Jay, do we have one final tidbit before we get out of here? I'm seeing a chart.
Oh, yes. Oh, I thought you pulled it up. I was like, oh, me and Z are thinking the exact same thing. All right, so we kind of ended the conversation with Paul Atkins and the Fed. So here's one particular reason why I don't like people making bets on what the Fed is going to do so far in advance, because it changes about as much as Donald Trump's mind changes on tariffs. Mm-hmm. Last week we were feeling optimistic that okay, Fed's gonna start cutting rates again, and then we got an entire shit show over the weekend, and now the probabilities are down once again. Right, so it was climbing to like 30% plus last week, and now we're back down to 20%. That the Fed is going to cut 25 points, and then it's back up to close to 80% that they're going to hold. So be careful. Volatility probably incoming next week, because all of this, the shitstorm happened over the weekend when everything besides crypto is closed. So please, just please be careful. Be careful. Practice proper risk management. Have your stop losses in place. Don't get caught in the middle. Please, we want you guys to win.
Girl, by the way, can we flash the oh no, man, it's gone. I was gonna say, I think based on the probabilities, unless it's drastically changed, I think the June meeting is where we have the more likely probability of getting a rate cut as opposed to no rate cut. That's the first time. May still looking like no rate cut based on the data, and that's CME Group FedWatch tool. They pulled data from the the futures market. That is how they predict that. The bond futures and interest market as well. That's how they get their data.
Dude, I bet you they're gonna start incorporating Polymarket and Kalshi.
That'd be interesting to see. So it would be.
Bet. Hey,
all right,
man,
tell you what though.
Predicted the election.
Yeah.
A lot sooner than any of the a lot sooner than any of these other political pundits did.
Moves up and down a lot. I will still hold that I think we need to start QE sooner than later because we might start too late. As we know, there's a lag to this whenever you start cutting rates or raising rates.
Not just that, but the data that we get too also has its own lag on top of that, because all the data we get is at least 1 month old when we
It's
get
been
it.
trending really well. Most of
Already,
it.
tell you what, let's go ahead and go around the horn. Mr. Agent J, where can the folks find you? What do you got going on in the near future?
You can find me on Instagram at _P90Hex, on X. Instagram at agent_JShroth, on X at _P90Hex. But if you want to get a hold of me, I spend the majority of my time. I produce most of the work in Telegram, right? That's where you'll find most of the content that we at the DGen Roundtable produce. You could find me, Z, Tracker, Dace, Bean hops in there every once in a while. Will hops in there every once in a while. We stream almost every single morning, pretty much every single morning, 7:45 a.m. MST, market open stream. That's where you can find me. So please like the damn video, scan the QR code. That's Miss Kobayashi's Dragon Maid. I thought that was hilarious. A fellow weeb who also likes anime and who also likes crypto meme Miss Kobayashi's Dragon Maid. So I really like that. That's why I had to post it. But like the damn video, comment, subscribe, scan the QR code, jump into Telegram where you're going to find a thriving community of like-minded individuals who talk about crypto. You want to talk about economics. You want to talk about anime. You want to talk about whatever, right? We got a room for you. Whatever floats your boat, unless you're a weirdo, in which case, case by case basis. But other than that, thank you, ladies and gentlemen, for joining us on this wonderful Sunday evening. We know that time is your most valuable asset, so we do appreciate that you spend some of that time here with us, whether you're here live or joining us on the replay. Until next time, Z.
Will do. Jay, it's funny you put the Kobayashi Dragon Maid meme out there because I actually just finished season 2 myself.
Oh, dude.
Nice.
Kobayashi Dragon Maid is such a great series. We're not gonna get in it now, but it's one of my top favorite slice of life shows ever. It's absolutely good. So
that's
good.
another Whiskey Wednesday.
Mm-hmm. Yeah.
All right.
You gotta do the Warhammer. You got to do the Warhammer one first with Will. He's been looking forward to that.
That's
man.
true. That's true. I mean, Lord knows I got plenty of models to paint. Got more stuff as always. But folks, you can find me on Twitter and Instagram at ZenithDI. That is where I post. That is where I post a lot of the legal stuff. So for anybody that knows me, I've been following the Richard Hart case for a long, long time now. So any updates, you can check me over there. I'm usually chatting with Nuclear Herbs, and we're going to try to get him on for a special guest, by the way. Outside of that, though, folks, you can tune into our show Sunday, Wednesday, Fridays, 8 p.m. Eastern time every week. We have an upcoming Wednesday show. I believe it is a Whiskey Wednesday. I'll have to double check if we have a special guest, but I believe we do not. So please come hang out with us, hop on the stream, chat, whatever you want. And then after that, Friday, we have another book club coming up. I cannot remember the book that we're covering right now because I wanted to do 1984, but Will is traveling, so he will not be able to make that one. So he asked me to delay. Actually, now that I think about it, we're doing The Speed of Trust, or at least we're doing a redo of Speed of Trust. It's a great book. Stephen Covey is the author. And we look forward to seeing you there. And then we look forward to seeing you next week. Same time, same place as always. We're going to be talking about everything news. Hopefully it's not more tariffs, but if I'm a betting man, it's probably going to be more tariffs. Let's be real. We'll try to spice it up though for you. And we'll keep an eye on them markets. And if you want to keep up with the rest of the markets, catch Agent J's Market Open streams in the Telegram. Ski on the QR code. Get in there. All right, Bean, please take us out, good sir.
You got it. So just want to wish everybody out there that celebrates a happy Palm Sunday. For our Jewish brethren, happy Passover. Started yesterday. And if I don't see all you, a happy Easter coming up next week. First, I want to say that I'm traveling this week. I've been traveling a lot for work, so I may not be on the Wednesday show. Next week's Easter, so it's going to be a tough week. But this was a really good show. I know we kind of didn't get to everything we wanted to talk about, but you guys killed it. Happy to chop it up tonight. And I just want to thank everybody for spending your time with us. The markets are unpredictable and ever-changing. We do our best to keep you up to date on all things that affect our cryptocurrency interests. You could be anywhere else, but you choose to spend your time with us. As Agent J just said, and as he always does, time is our most valuable asset. We appreciate that you spend some of it with us. Mr. Zenith, get that because it's time to remind our degens and degenettes that it's always imperative to degen responsibly.